Hello everybody. Hello everybody. Welcome to the Quant Data Wednesday edition Q&A. We run these every Wednesdays and Sundays for you guys in the stream, in the Discord, for free, of course. So you can ask questions, we can navigate the market together, we can learn together, right? That's what we want to do. We want to be good traders, we want to be self-sufficient traders. We want to learn how to navigate this market. We want to learn how data can help us improve our trading, improve our risk management. So today on the agenda, I'm going to, just recap a little bit about today. Let y'all know. I think you guys know I missed the short, but that's okay. We continue trading on the day. I still ended the day with $3,400, so that's pretty reasonable. That does pay for my wife's bills, right? Whatever she wants to buy. Yeah, I want to show you guys how using the data, it could have told you that a short was coming. And then we're going to go over a little bit of levels, because I know some of you guys have forgotten how I like to do levels, but I just recapped it today because I went through my journaling after the trading market, or trading hours rather, and I noticed a couple things, and I was like, this should have told me to get a little bit more aggressive as I was progressing through the day. So we're gonna go ahead and get started. So this was today, right? So right here, this is our brokerage right here. I'm gonna just quickly draw a line just so we know how to separate the 2 days right here. So this blue line onwards, right? This blue line onwards. I'm gonna delete this line. I don't know what that is. Oh, I messed up already. What is ABJ doing here? He is silly man's. So this was the start of today. Now, we had that big gap from the open, right? I know a lot of us did well catching the data, making that leg up towards 67.30. That was the MVC from the start. We had 67.05, but then it quickly shift upwards. I'm going to show you really quick. So this is why in the beginning at the open, we didn't want to target that gap. As things changed, the gap seemed more and more likely, especially when we broke open price, and everything just seemed to fall in line. So I have here our 4 favorites for 0 DTEs. We have net drift, which we can't go back in time. You can already see the outcome of it, but I'll pinpoint some things. Delta down here, Gamma over here, and then Vanna. So Vanna top right. Now Vanna did become important today. As we came down, as we bloomed down in price, because we know, for those guys that follow volatility and use volatility to trade, we know that IV above 30%, Vanna becomes the magnet afterwards. Although it was a little late when we started to flush down, Vanna still showed us that it was important. It was important for us to see. So at the open of the day, why did we go long? I'm going to show you right here. This is Delta. This is Gamma, our favorite. We're just going to do 2 minutes into the market session. Right, so right from the open, we already knew. Okay, hey, look at this. What's going on? 67.30, right? We see that. Delta, not so much. But why did we decide that long was the way from the open? It is because, relatively, when we look at where we're trading from, right? Long deltas represent what? Represents long calls and short puts, right? So it's a bullish sentiment. That's all you kind of need to know. It's bullish right here because generally the market wants to, where we're trading, we want to go long, but there is an inkling of a couple guys that are short here, right? So we don't really make the assumption as to who they are, but we just see that raw data here is showing that someone at 67.25, 67.35, they're short. Right, but again, overwhelming force in exposures, we're net long. So as database traders here in quant data, what do we want to do? We want to catch the longs. We want to ride the trend. We want to go along with everyone else. Everyone else is long. And so why would we flip bias? And usually I know things could flip, but remember asking ourselves the 3 questions, right? What's the most likely scenario for price based on what we see? That's number 1. Number 2, how do you want to, number 2 is is what we see worth our risk, right? And then number three, how do we want to take on that risk? Right, so during the open, obviously IV is very high. I like to sell credit spreads first. We're making that push upwards, right? And as we progress, I want to show you what happens around the first 30 minutes. So we're eyeballing this 67.25. It's super negative. I told you guys right from the start of the stream, as soon as this starts to contract, I would be interested in potentially seeing a move up. This is what I'd want to see first, though. I want to see it contract. So what happens in the first 30 minutes? What do we see, boys? What do we see? Actually, even in the first 20 minutes, right? You can already see the change, right? I'm gonna blow this up real quick. So 20 minutes, right? This is your open, right? 500 negative, 500 million negative, 567. As we progress through time, what happens to that strike? They start to buy it back, right? They're closing their shorts. They're allowing price to move up towards where we want to see it, right? We wanted to see it 67.30. Obviously, I know the market didn't get there. We got to 67.24, and then we started to trickle down and started to reverse a little bit. Now, this is what I wanted to show you. Because we know that data is dynamic, right? We can't just marry our biases. In a 0DTE time frame, especially during OPEX, we want to keep our heads on a swivel, right? We don't want to marry a bullish bias. We don't want to marry a bearish bias. We want to just trade what we see and continue eyeballing the data to see, okay, what's changing, right? What, and in this scenario here, what is happening? Why aren't we moving up towards 67.30? Do we still have a chance of 67.30, or do we want to wait for the next move? Now, I know some of you guys were questioning me in the stream today. Why did you close your put credit spreads from the open for 50%? It was because I wasn't too sure anymore of 67.30 at this point in time. And I'll show you at what point in time. So when did I think that 67.30 wasn't going to come anymore? It was around here. So you can see already how much the data is contracted, right? How much 67.25 contracted. So around this point here, around the 7.30 mark, we had this 67.25 continue to just kind of stay flat. Didn't really move. And this may not seem like a pothole to you, right? This may not seem like a pothole to you. But technically it still is, because not only is this a pothole, right? Normally we see this, right? We go like this. There's green, 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 green. And then there's like one inkling here. This is normally what we see, a pothole. But nonetheless, when we see something like this, let me just turn that back off. A strike that's just significantly lower than the rest of it, what can we kind of assume here? It's a little bullish, but there's still some interest here. Like, why is it not all the way bullish, right? Why is it so much smaller than the rest of the market? Is it because that possibly underneath this strike, there's still a little bit of indecision, right? So you always have to play these scenarios in your head as you're trading. So this technically is a pothole still, because it's a lot steeper of a step downwards. Normally what we like to see in any profile, right? In this profile, in a gamma profile, we want to see clear staircase style moves towards one singular strike. Does this look a lot better, right, for upwards than this? Can we do that comparison? Does this look better, right, where we have a clear staircase? Or does this look okay? Right? This looks a lot better, right? This is a lot more confidence inspiring, right? It's a lot more confidence inspiring. That's what we want in the market. We want to make confident trades. We want to trade our A+ setups. So I'm going to flip it back now. I want to show you what else changed around the 7:30 mark. 7:30 right here, right? We started to lose a lot of value here, and then not only that, right? We still wanted upside. We weren't too sure. But what of these four did we kind of start to maybe make a new decision here, that maybe we don't actually go any higher, right? It's the net drift. So take a look at the net drift here. We know that it actually juiced up quite a bit here. So at the high, we had 4 million in divergence. Puts really came down strong. But even as price was starting to consolidate, what are we kind of seeing here? Right in this area here, it started to come on together, right? Come on down. Calls started to get sold off. Puts started to rise. What's going on here? Price hasn't moved that fast yet, right? But we know that a net drift crossover is an idea. This gives us a trade idea. So I want to show you what happens now when the net drift crossed over at 8 a.m. Right? So we're going to zoom this data to 8 a.m. What happens on this strike right here? The 67.25 has returned. And as we move forward, we hit, we start to come down a little bit. And if we go even further, right, marking the big difference here in volume as well. Right, net drift is one of our favorite tools because it helps us identify potential trend changes. Right, let's go forward a little bit more. Right, what happens when we break open price? That was around open price break was around 8:30. So London close. Look at this big shift here. So as you're going through the data, you can see like, okay, we have 1 billions. I always say that to you guys that 1 billion usually is not that strong of long deltas or short deltas. 1 billion is very easy for the markets to give up, to change. But what do we see here? So this is our shift here. And we start to really break down. Now all of a sudden 6,700, 67.25, we've broken open price, and all the long deltas just kind of gave it up. Right now, as the trend is changing, what can we do to what do we do on our charts to kind of identify levels? Right, there's some very obvious levels that we can target. Right now, if you remember, if anyone remembers, I'm just gonna take on the base levels that I usually like to do. Yesterday's high, yesterday's low, right? Yesterday's 50%. That's like right around here. Right around here is your 50%. Just a little bit right there. What do we see? And then obviously I called out this the Trump candle. We call this area right here the Trump candle because this was when he tweeted yesterday, and then we came down this low. But obviously we wiped that out too. We wiped out the gap too. So this was your gap earlier. It went from here to here. Right, so we wiped out that gap. Right, you're using these levels to identify either targets or pivot points. Okay, totally up to you how you want to use them, because there is two kinds of trades, right? There's the reactionary trade, which is you taking the pivot, or the predictionary trade, which is you predicting where price is about to go, right? So as we came down, what level did we actually hit? Right, so what are the ABG levels? We know that they are yesterday's high, low, 50%, current week, high, low, 50%. It's super basic, right? But this, all it does is it just gives you an area of interest to potentially put on risk, right? And then last week's high, low, 50%. And the dynamic levels are gamma 0, MVC, potholes. Right, so if you guys have been following along for some time, you guys already know this. And then open price, previous day close. Right, so why did I decide that as soon as we got to the 50%, that I should probably trade the pivot? I sold some pretty silly spreads. Which spread did I sell? 65.65. 65, 65, P 65, 60p, and then I even got dicer. I got 65, 55p, 65, 50p. Both of these gave pretty good credit. I think this one was like 0.9, and then I actually got like 1.2 on the lower one, and that was because things just got a little crazy. So 1.2, right? These are already posted on my Twitter, the actual orders. But that was because as we got to this 50%, right? These are my triggers. Like, I want to try to catch the pivot. Now, I don't like to normally go long after it. Not on this. IV was just too juiced, right? We had IV well over 30%. VIX at this time was already pretty high as well. It just gave us better opportunities to potentially catch the pivot. And there you go. We went right above that pivot. And so using anything, right? You can use any levels you want. But for myself, if you guys are trading the ABJ way, this is the easy ones that I like to put on. And they've seemed to work, right? You can actually take a look back as well on every other day. Just take a look. It really helped you get started on some positions. So the idea here, it was a reactionary trade for when I sold this spread here, a reactionary trade, but I was also predicting that price was not going to come down any lower, right? 65, 65 was like right here. Let me just mark this right here. That's like this red line right here. That's all the way down to yesterday's low. I just didn't believe that with so little time left. And it gave us pretty good premium. So yeah, that's it. Kind of what I wanted to go through. I wanted to talk about as well as we progress through the week with OPEX. Sizing down, nothing wrong with sizing down, right? We're going to get these net drift crossovers and these flips, right? This entire week probably. We've seen some pretty crazy price action already, right? Let's go back. Right? Like, look at this. Pretty crazy price action. To expect that there's going to be no more, like, I highly doubt it. Right? So there's nothing wrong with sizing down and staying on top of things, and just making sure that you take your base hits, right? That's what I'm doing. Obviously, I made a lot of money today, but taking base hits is very important because in the end, you need to pay your bills, right? That's the goal with trading, right? We're not in it to lose money. I want to take a peek here as well. So 10-15 is when the damage kind of stops, right? So I know some of you guys are looking like, oh my goodness, 6600 is lit up like a Christmas tree. There's something there. Here is 10-15, right? And we started to pivot on the Havana side. So take a look right here. What are we kind of seeing now? I know Havana is showing a lot more strength, but so 10-15. The singular strike. 10-15 right here. But you can see on the net drift, despite the data pointing downwards still. 6600 again would be a huge psychological level, but this was a pretty solid pivot, and that was, you can see immediately the change in the net drift. Immediate change in the net drift right here. Literally a big buy up right here. Right, and so this again gave us that risk. I mean, I put on the put credit spread even before this, just automatic triggers on my level there. But you could have waited. There was still a lot of opportunity if you just waited for this to close in. This was a big divergence, almost 10 million. That's huge. So as traders, you know, it's always up to you how you want to put on trades, where you want to put on risk. In the end, anyone can put on risk. It's about how you manage that risk. But that's it. That's the end of my video, and I want to make sure that you guys are trading with us in real time and seeing this and understanding it. I know a lot of you guys ask questions all the time, like, hey, like, what do you think of this? What do we do here? I'm not much of a guy to give instructionals. I don't really like to tell people what to do, but I'm going to show you what I'm going to do. And if you want to take me as an example, by all means. Yeah, that's it. So for those guys watching on YouTube, thank you very much. If you guys want to see more of this, we'll put out more. A lot of exciting stuff coming on our YouTube and the Quantita channel. Of course, the mentorship's coming out. The couple series coming out as well. Hopefully, they're all done by the end of October. I'm pretty confident they'll be done by the end of October. But yeah, that's it. Catch you guys later.